I get this question all the time. Now tell me if this is you. Hey, quick question. I've been using this strategy and it was successful for 2 weeks and now it's got 4 back-to-back losses. Then they go into asking me which strategy I use and what the percentage win and loss is on it. I don't trade one specific strategy. I know pretty much everything about day trading. And in my experience, that's the only thing that's going to get you to become a profitable professional day trader. So in this video, I'm going to break down everything. So make sure you got enough time because this is probably a 20 to 30 minute video. Welcome back to the channel, everybody. My name's Artie, and this is The Moving Average, a show where we discuss everything day trading to keep you profitable. This is the issue with people learning how to day trade through YouTube videos. They get one hyped video about this strategy makes this percent all the time, and it's a little bit of an exaggeration. I like the fact that through my day trading journey, I've lost a lot, and every time I lost a trade, I wrote down what happened, so that I can learn why during that situation I lost that trade. Because of that, I continue my education and constantly think about new concepts, new ideas, learn new price action strategies, all of it. And so this video is for those people asking what strategy I trade. I'm going to give you a full breakdown of how I start my analysis, how I can identify price action movements, how I draw up my support and resistance, which confluences I use, the whole shebang. So let's get into the charts and I'm going to show you exactly what I'm talking about. Okay, so right here we're looking at GBP USD on a 1 hour time frame. From here, I've already drawn up the most recent support and resistance levels. What you need to do is find these levels where the price rejects or bounces off of and then draw a line. The horizontal line tool is right here for those of you that don't know. When you draw up these horizontal lines, you will tend to see that these prices right here are usually even numbers. If you can adjust it just a little bit to be those even numbers, these are what is known as psychological price levels. For some reason, at this price point, the price reversed or stayed in a period of consolidation. But again, some of them do not do that, like this one right here, and I will explain this one a little bit later. Once you've drawn up your support and resistance on the 1 hour, because it's probably closest to the time frame that you're going to be trading, whether you're on the 5-minute or the 15-minute, what I want you to do is jump to a higher time frame like the daily. Once you put it on the daily, you'll be able to see that yes, a lot of these support and resistance levels match up over a long period of time. You're seeing a lot of rejections off of these exact same levels, whereas I only did my analysis to about October 13th, 2021, whereas this chart goes all the way back to May 2016. You can see these support and resistance levels are very static and tend to have the same occurrences over time. Now again, guys, this is before I put any indicators on here. I want to get a good overview of what this exact market is doing. This is why I suggest only focusing on one pair. And until you've mastered that, do not go on to another one. The next thing that I want you to look at is the direction of the price. Is the price moving down or is the price moving up? That is known as a trend. And within that trend is what's called market structure. The price will go down, it will go up. It will create a lower low, a lower high, a lower low, a lower high, a lower low. That is the basics of market structure. Once market structure is broken, and instead of creating a lower high, it creates a higher high and then a higher low and a higher high, that is previously broken market structure, so you're looking for a new trend. Then continuing on, you can see the price made a higher low, but failed to make that higher high, breaking that market structure, showing a reversal of the price. Now, as price goes down and starts to form this market structure, this usually isn't random zigzagging staircase patterns of the price. The price had a lot of momentum going down and then shot back up. This movement back up against the original movement is known as a retracement. A vast majority of these retracements, you can use a Fibonacci retracement tool to look at what percentage of that movement, the price retraced. So this is your Fibonacci tool. If you would like to know good optimal settings, just take a screenshot of this and adjust yours later. But essentially, from top to bottom of that move, you're looking for one clean, long movement. Then when the price retraces, this is the most ideal zone. This is known as the gold zone between the 0.5 and the 0.618. That means that of this entire movement, it went backwards 50% or 61.8%. When it does that, it's almost assured to go down to the same level that it was. And if it continues, these are your two different price targets, the negative 0.382 and the negative 0.618, a 38.2 forward movement from that original movement, or a 61% forward movement from that original movement. The reason why this should be your take profit one right here, meaning that it may not continue after that, is the possibility of a double bottom at this point. So if it rejects off of that level, you're looking at a double bottom. If you do see one of these, you should also be looking for an accompanying RSI divergence. So the RSI was, say, massively overbought at a 20 level right here, and then right here, it was at 37. So even though the price was at the same level here, the RSI is showing you a discrepancy there and indicating that an upwards movement from that point is possible. So using that exact same concept, if you take the Fibonacci tool and you take it across this big fat movement that happened, we're basically retracing here at the 50 level, which is also a known level of support and resistance. Once that happens, your price target one should be here, and then you can use the other two for long-term price targets, or you can simply target the next support and resistance level. All of these options are dependent on the strength of the trend. As you can see, the original movement was extremely strong and violent, so the likelihood of a continuation is higher. Again, even when the market structure was broken down here, this move from this support level up to this resistance level is that one continuous movement, and the price shot down in one 1 hour candle perfectly to the 0.5. Nice Fibonacci gold zone, and continued up. Now, how do you know where these pivot points are? What is the indication of it? And it is all candle formations, groups of candles together or one specific candle that tell you a story. And you need to literally study all different types of candle formations. Sometimes it's easiest to print it out and have it right next to your screen so you have a visual representation of all of these candle formations before you can actually memorize them. So like right here, you can see a perfectly rounded top ending in a big fat engulfing candle. And again, a very sharp movement like that is likely to retrace at a lower Fibonacci level, like a 382 as opposed to a 0.5 or a 0.618 like we saw in the previous example, because that move was less aggressive. This was just cascading down like a mother. Now, candle formations I've covered in previous videos. With price action candle formations, I made the video. You can see the thumbnail right here if you want to search it later, or you can just Google price action candle formations. Now, because I'd be trading on a 15-minute time frame, because it is becoming my most favorite time frame, because the candle formations and the structure of the price and how everything goes keeps me relatively in tune with the higher time frames. So, for example, this one, the big engulfing candle started the movement down, brought it down to here. We had a 382 retracement, and then it continued down. But even if you're not using the Fibonacci tool, if you know price action structure, you can see a wedge pattern being formed. Big move down, wedge, breakout, continuation. And another thing that you can tell because of long hours studying all of this shit is a tweezer top. So you get this rounding top starting to form, and then you get this perfect tweezer top. Zooming in right there, you can see the closing of one candle was the exact opening of the next candle, and they have the exact same candle wick length. This is a tweezer top. So that tweezer top right there was a signifier that that movement is just going to drop down right there. Then when you're looking at your price targets, you want to always keep in mind these support and resistance levels. They are the easiest price targets to hit. This 382 retracement was closest to this support and resistance level, so I would have gone with that support and resistance level instead of a little bit further to that. And if you're one of those people that wants to swing trade, swing traders do one thing very, very well, and that is a trailing stop loss. They are able to hold trades longer because they keep moving their stop loss up to the retracement level. So for example, with this movement, they entered in here, price came up and retraced. They moved their stop loss from here to here. As the price continued and made a new lower high, they moved their stop loss to there. Kept going down, retraced, they moved their stop loss to here. Kept going down and broke market structure right here. So this stop loss was their take profit. They did not get the entire move. Their stop loss was hit because they trailed it the entire time. So unlike a normal person scalping for 20 or 30 pips, a swing trader adjusting and trailing their stop loss got a 419 pip movement on this. The issue is it took 15 days. I can't do that. I'm not capable of it. It's just not my style of trading, but everybody has their own style of trading. Now, once you've done all of this and you've decided that this is your entry, but you want a little bit more confidence in your trade. You want some more confluences. At this point, and only at this point, should you start using indicators to give you that confluence. So what I'm looking for here is either an engulfing candle or it rejecting off of a moving average, seeing an overbought territory in a stochastic RSI or a divergence on a traditional RSI. So now we can start using those things. So this is my indicator, the TMA overlay, and you can see we have the 200 moving average, the 50 moving average, and the 21 moving average. These are all smoothed moving averages. They're the ones that I prefer. I've changed the settings a bit just to do this, just to show me 3-line strikes and the 21, the 50, and the 200. Everything else is unticked. So as you can see, the price is retracing up to that 382 level, and then we get a 3-line strike. 3 consecutive candles in one direction and then 1 engulfing candle in the opposite direction, and that happens exactly at a 21 period moving average. So how many confluences is that trade right there? You've already got a Fibonacci retracement. That's 1. You have a 3-line strike engulfing candle formation exactly at that level. That's 2. At that level is also the 21 period moving average. That's 3. Now, if we draw a vertical line on that candle right there and pull up a stochastic RSI, you can see that the stochastic RSI is crossing over and going in the downwards direction. We are in an overbought territory and stochastic is crossing over. That is confluence number 4. This is what that trade looks like in a live scenario. So say you're live trading the markets right here. You see this big movement down, a move up to the 382, and then boom, you get a 3-line strike. It's rejecting off of the 21. It's a 382 retracement. You're getting a stochastic crossover right here. That is your entry. You're taking your short position and you're laying it right there. Your stop loss is going to be the next moving average up, maximum. If this were a less violent move down, I would move my stop loss up here because I would be expecting a gold zone retracement, but because it's retracing at the 382, the next moving average up is completely fine. You can even do the 50 level on the Fibonacci tool. On a 15-minute time frame, that's a 17 pip stop loss, and that is perfectly acceptable. Now, before you actually enter your trade, you need to see if your take profit area is going to be good enough to actually take the trade. If you're only looking to get 11 pips out of it, you're not getting a good risk to reward ratio. So if you're targeting the previous low right here, you're looking at a 1 to 2.19 trade right here. This is plenty, especially if that's being your take profit 1 area. But because this move was so violent, you have a lot of momentum in that direction, so you can actually look to ideally take it to that 382 forward Fibonacci level, which is also a known level of support and resistance. So out of this trade, you're getting a 1 to 4.3 risk to reward ratio, which is amazing. And if you use those trailing stop loss techniques that I showed you earlier, you can actually close 90% of your trade here if that's your main income and that's the way you normally trade, and you can train yourself to take the other 10% of that remaining trade that's still active and trailing stop loss it to get more accustomed with swing trading. And just as a reminder, for most of you guys that already know how I like to trade, I like to primarily go off of the 200 period moving average. I like to get that first move off of it in one direction, whether I'm getting in early or a little bit after it crosses over. Once I see a nice movement past the 200, I'm out. I'm done with the trade because I'm assuming the price is too far away from the 200 and is going to go back to it. And as you can see there, it went back up to test the 200, trying to fight this level of support right here, and continued up, breaking the previous market structure. Boom, right there, previous market structure was completely broken. All downtrend is null and void until this new up market structure is broken. And again, touching on divergences, you would have seen that. You hit this level and this level, right? On the RSI, you can see it created a low here at 29 and then created a higher low at 33. That's your divergence to give you an indication that the price might break its previous market structure and reverse. Now there's regular divergences and then there's hidden divergences. Hidden divergences are trend continuation divergences, and you can see that the market structure right here, we created a lower low, a higher low, and then went down. Right here at this point is still lower than this point. So this is a lower high, but you can see on the RSI, it was here and then here. It's the opposite. This one's going down, this one's going up. This is a hidden bearish divergence, rejecting off of the 200. All of these things that I'm showing you guys are ways that I trade. I see all of this all of the time. Every time I look at the charts, I see 100 different scenarios. I see 100 different price action things because of the amount of time I've spent staring at the charts. Now, if somebody leaned over my shoulder and saw this, he'd be like, dude, what the f are you doing? But in my brain, all of this makes sense. I'm going to clear it up because you can't have this on your charts all the time. You will get confused. That's why it's good to do analysis on naked charts. Just use your fundamentals and your price action. Day trading is not for the faint of heart. And if you're one of those people that can't commit, 8, 6, 5 hours a day for the next 6 months, a year, or 2 years to learning every single aspect of this, then don't expect to get high win rates and high profits. You're not going to replace your income unless you know this type of information, or if you're freakishly lucky. Luck and day trading happen just like in gambling and day trading. Some people are just luckier than other people, but I would not bank on that. Now, just to show you guys this, because I know that a lot of you guys have full-time jobs. You can't be day trading all day. You don't have the time to commit to learning all of this. This is where those indicator strategies come in really, really handy, but you have to expect a lower percentage gain, a lower win rate, because algorithmic trading models do not take into account the FOMO mentality, or fear of missing out, or the FUD mentality, fear, uncertainty, and doubt. For example, the last week or two has been absolutely catastrophic for algorithmic trading styles because it doesn't take into account, massive inflation, people panic selling, the crypto markets being crazy, mass shootings in a certain area, the war going on. Those things influence the price more than you know. And the way that you can be a successful day trader during those periods is knowing the price action stuff that I was just talking about for the last 45 minutes. But again, if you don't have time and you just want to have a notification from TradingView come into your phone or on your email or whatever, or on your laptop while you're actually doing work, you can set up these trading styles using 3 indicators and get a little beep, look at it, enter a trade accordance to the rules, set your take profit, set your stop loss, and then close it. So just as an example, I'm going to show you quickly. This is one of the strategies that we have on the new project that I built, the trading floor. This strategy is called the Outback. It's a 1-minute strategy. And statistically, with back testing, between 40% and 55, maybe 60% win rate, but it's mindlessly easy. You have your chart set up the way that we have it set up. You're in the office doing work. You set up your time frame for London session only, and then you get a beep. You look at the charts, you got a kangaroo on top of the candle, so that means you're going short. You enter your trade right here, your stop loss is above the ATR bands, and you're targeting a 1-to-5 risk to reward ratio. You get that signal 4 times in a row right here. So that's 4 trades. Each one of them played out. This whole process of these 4 trades would have taken you a total of 15 minutes. This was May 2nd. You had 4 back-to-back wins with a 6% profit in your account. Next day, you had 2 wins, 3%. Next day, you had 1 win, 1.5%. Next day, no trades, no signals. Next day, again, no trades and no signals. Next day, you had 3 back-to-back losses, minus 3%, because your risk is only 1% per trade. Next day, 1.5%. And this is from May 2nd to May 10th. So between May 2nd and May 10th, you did amazing. You got a 9% profit with literally probably 37 minutes worth of actually opening up your charts, entering your trade, take profit, stop loss, closing it, and getting back to work. But I'm not gonna lie to you guys, sometimes this thing sucks. For example, on May 17th, you had a signal, and another signal right here. All 3 of these were losers. You're losing another 3% right here. That takes your 9% down to 6%. Right here, you had 4 back-to-back signals telling you to go long. That's an additional 4% down. And then more no trading days. So you can see it's extremely slow going, but you're still in profit because of the risk to reward ratio, the 1 to 1.5, and it's mindlessly easy. And you can do it with a full-time job and 5 kids and only being able to trade Tokyo session or New York or London session. Like, this makes it mindlessly easy for those that do not have time. The only trade-off is you're going to make less money and have a lower win rate. This is like buying bread at 7-Eleven versus Walmart. Same exact bread, except 7-Eleven has a convenience tax and the price is tripled. So what are the things that you should have to be a good trader, to have all of the tools in your tool belt, to have all the education that you need? The first thing that I suggest that helped me out a lot when I was first starting, because I thought I knew everything, but I ended up not knowing shit. You gotta find a good community. I don't care if you use ours or somebody else's. You need other human beings to talk to. Social interaction is good, as well as people that have the same mindset as you, that want that financial freedom, that know day trading. And that's why we started the trading floor. It is literally the primary aspect of this entire project that we built out is the Discord community, free of scammers, because it is a paid service. On our team, it's me, Christy, and Brutus, all professional traders. We also hired a staff of about 6 people, all professional traders. Every single one of them is in one way, shape, or form on here 24 hours a day to answer every single one of your questions. The general chat is like meme city, but then you can see here on the left, we have London chat. So only trading chats during the London session, the New York session, and the Tokyo session. And if you specialize in one specific category like Forex indices or crypto or commodities, you can do that here. This is gonna be the thing that helps you the most when you're lost and you're unsure about your trade. Ask the community, have somebody that's a professional trader answer you. Period. End of story. You'll get more confidence and more confluence from that one trade that you've already analyzed. Now, with this project that we built, the trading floor, I'm not selling you on it. Like, that's the last thing I want you to do, is feel pressured into doing this. I'm just telling you, we've consolidated all of the information on the internet, which you can find for free on Investopedia, on Baby Pips, on all different resources on the internet. It's just spending hundreds of hours looking through the scattered information, which we've already consolidated for you, and that's the whole concept. We have everything in one place for you. So all of the price action strategies, everything that I talked about price action wise within this video is all explained here in depth. Fibonacci levels, trend lines, psychological price levels, confluences. And one of the most important things is trader psychology. Being able to learn trader psychology from Christy, I mean, I respect her a lot as a day trader. The things that she discusses in this video will help you stop emotionally trading and trade more like a machine, looking at numbers and statistics only. Even in the Discord group, we have a mindset chat for people really struggling with the trading mindset, overcoming specific obstacles that they're having. We have a bunch of coaches in here helping you get through that process. The secret ingredient of day trading.
The secret ingredient is Nothing.
It is practice. It is experience. It's time spent on the charts. It's watching these things happen in replay mode, and it's watching these things happen live. It's being able to react and commit to a trade. It's being able to do all of that analysis and then hop onto MT4 and enter a trade knowing that you just had a fib retracement right here, put in a sell position, adjust your stop loss to right above that level, and enter your trade. The quicker you can do that and the quicker you can do your analysis and be confident in it, the better entries you're going to get in on your trades. And I forgot to mention, this risk calculator is awesome. You can it automatically does everything for you, and it's a part of the group package. Like, you get the community, you get the chats, you get all the lessons, you get all the psychology, you get the risk calculator, you get the indicators and the strategies, and we just wanted to build a place that has everything, and it's there. I really tried to cover everything that I could off the top of my head, but there's probably 7 or 8 things that I left out. If you feel like I missed something and you want more clarification on something, please leave a comment down below and I will make a follow-up video on that. I really hope that you guys enjoyed this video and got some value out of it. If you want to get in on this, the link is down below. It's thetradefloor.com, trdfloor.com. We would absolutely love to have you and get you from where you are now to where you want to be. I'm done talking. Thank you so much, and we will see you in the next video.